in order not to disturb the speaker. You're more than welcome to keep your camera on, but we will make sure to stay muted and not to interrupt the speaker during the presentation. So as you know, 2024 is an election year with the election date scheduled for Wednesday, 29 of May, which is coming up very quickly. Therefore, we thought it was a very good idea to host this webinar with two experts, Aroni Chaudhuri and Stephen Powell. They will be sharing insight with you today to analyze the expected repercussion of the political agenda, as well, the political agenda on the economy, including the effect on investments, policy direction, as well as budgetary decisions. So we will have more a first economic focus, and second of all, Stephen will focus more on the impact of sanction, corruption, and fraud on the South African trajectory. So it's going to be a rich discussion. We're still waiting for Aroni, sorry, but I'm going to start his introduction. Maybe it will make him come. Worst case scenario, we will start with you, Stephen. I would prefer to have Aroni's presentation because he's supposed to talk about the economy and give us feedback to like context all around where you're supposed to follow, Stephen. So let's give him a few more seconds of wait if we can. Oh, you're back, sorry. Yes, I couldn't see your screen.
Yeah,
welcome back.
Yeah, sorry, my Teams crashed. It happens. This is the
No
world
problem.
we live in.
A little bit of suspense.
Yes, a bit of suspense, and yeah, what is the world without a bit of risk, right? Good morning, everyone. I'm very, very happy to be here. So today, basically, in the context of this webinar, my part will really to do a kind of a mapping of South Africa's path in 2024, considering it's a very important year because obviously there are the elections on the 29th of May. Now, I'll do a quick wrap up of our global economic scenario because for a country like South Africa, it's important to know the global context that we're in. It's an open and trading economy. And then I'll shift into the specific of South Africa, and then I'll leave the floor to Stephen. So since I was late, I'll jump right in. So the first thing that we always look at in Coface is how the commodity prices are evolving, because most of what is happening in the global economy these days are linked to the movement of commodity prices. Now, the good news is that basically from the peaks that we had seen after the war in Ukraine, all categories of commodity prices have receded, but they remain quite higher than their historical trend, and especially during the pre-pandemic period. And this is true of the three categories of commodities that we follow, the large categories: metals, agriculturals, and obviously energy. So, for instance, if I start with industrial metals, which is also important for South Africa as it's the minerals and ores exporter, basically metals prices are quite low right now. Basically, all of the metals that are necessary to the energy transition still have quite solid demand, although prices have also receded from the peaks that they had reached. But for instance, for metals such as steel, demand is quite low. For several reasons, but the main one being that China is underperforming, and I'll delve more on that later in the presentation, but also because some of the main client sectors are not in such a good state. So here we can talk about construction or about automotive. If we look at agricultural commodities, prices have also receded, but there is much more volatility regarding agricultural commodities, simply because there are weather patterns right now that are affecting different regions of the world. Obviously, in Southern Africa, we know that there's a drought, for instance, in Zambia and Zimbabwe, that's quite severe. In South Africa as well, the weather is getting quite dry, whereas it was quite rainy at the beginning of the year. And so basically, that kind of weather phenomenon creates volatility in the prices of commodities. And on that, you also have, because of these weather events and lesser production, you also have countries, large producers that are implementing protectionist measures on some key commodities. So here we can, for instance, cite India with rice and sugar. So that creates pressure on agricultural commodity prices, and that is why they remain quite high and volatile. Now, For energy, which is probably the most important component of these commodities, well, there are several things happening. So for now, and I'm saying for now because the situation might change, the fears about lackluster global demand kind of outweigh whatever threats there are on supply. So on the supply side, obviously you have large OPEC plus members such as Russia and Saudi Arabia who have still production cuts in place. But on the other hand, you also have producers such as the US and Brazil who have stronger output. And also in terms of demand, as I said, I mean, global demand is quite stable, quite low. So there is rather downward pressure on that side. However, there are also some risks on the prices of energy. For instance, the situation in the Middle East, obviously, if the conflict widens and intensifies, obviously there will be concerns on oil prices, and same things for what is happening in the Red Sea. So, for instance, if the Houthi attacks get prolonged in time or also gain in intensity, because of the way that they affect trade routes, that also might affect energy prices, especially. However, for now, we do consider that the energy prices, well, will increase a bit for oil, but will stay in this $85 to $90 per barrel during the year. But there is still a lot of uncertainty around revolving around energy prices. So since the commodity prices have receded, obviously we have seen that the disinflation process is underway roughly everywhere in the world, barring a few exceptions. That is quite logical because most of the inflation in 2022 and 2023 was driven by higher commodity prices. So now that those prices are falling, obviously that is now transmitting into inflation through lower prices and lower contributions of energy products and unprocessed food products. That is also transmitting into goods. Now, our main scenario is that, yes, the disinflation process is underway, but we think that it's going to come to an end soon. And the reason is that the main driver of inflation right now, and in the advanced economies, which is also true for an economy like South Africa, is now services inflation. And services inflation is mainly determined by wage pressures. And since labor markets are still tight, there are still wage pressures, so you still have wage increases of 3, 4, 5%, depending on which economy you're in. So that is sustaining the services inflation, and which means that the last mile, so what we call the final amount of disinflation that is required to go back to the central bank's target, which is 2% in the advanced economies, will be the hardest. And we think that the inflation regime now will be higher than that 2%, so perhaps 3% or 3.5%. So what this basically means is that since this disinflation process will stop before the target, it means that in terms of monetary policy, the central banks will have to maintain a rather restrictive stance for longer. So this does not mean that there won't be a pivot. There will be, because it is expected that the Fed starts cutting rates in June or July. For the ECB, it will be slightly later, perhaps in September or October. But here, the main concern is that it's not really of how many rate cuts we are going to see this year. It's where does the interest rate level land? And the issue is that since inflation and core inflation will remain above the target, according to our scenario, this means that the interest rate environment and the level of interest rates will be considerably higher than what it was before. It will never return to the rates that it was before the pandemic, but it will even stay higher than what was initially expected. And so that means that the pressure on financing, both for corporates and for countries, will remain substantially higher, and that is why we are also expecting that the effects of this monetary policy on the global economy will actually be longer than initially expected, and this is why we'll have a slower regime, a slower regime in terms of growth. That's why, in terms of global GDP, we expect that there will be a slight deceleration this year. We can say that it's rather stable, so 2.4%. We're not anymore in the scenarios of a recession that we might have had, in 2023, because the global recession is a growth rate that is below 2%, basically at the global level. Most of this growth will be driven by the emerging world, with the advanced economies performing much worse with growth rates, for instance, in Europe that will be hovering between 0 and 1% for the main economies. So, for instance, Germany will continue to suffer from the woes of its manufacturing industry. Spain, for instance, will perform a bit better thanks to tourism. The UK, Italy, same thing, low growth rates overall in Europe. Now, in the emerging economies, you will have India, which will be performing quite well thanks to its very large domestic market. Its banking sector is also in better health now. And so there will be strong performance, and especially in sectors such as construction or ICT, because there's a lot of infrastructure investment around key industries in India. Now, the other reason why there is a deceleration is because there are two very large economies that overperformed relative to forecasts in 2023, that is the US and China, and that will be slowing down this year. So for the US, everyone was surprised by the performance of the US, which was at 2.5%, very strong. The main reason was that basically the consumption patterns and consumption in the US remain strong despite the spike in inflation, and that is because US households had accumulated excess savings during the pandemic, and they used those excess savings, so the US consumer saved in order to consume, and that is why the economy remains so resilient and that the job market also remains quite resilient. So there will be a deceleration in the US because the stockpile of excess savings is starting to be eroded, and that American consumers will at some point start to save again, but the performance will still be strong compared with all of the other economies. And the other economy that is strongly decelerating is obviously China. So in the context of China, so basically what the Chinese authorities want for China is that China basically shifts from an economy that is based on investment and exports from one that is driven primarily by its domestic market and by consumption. The issue is that the rebound in China was not very strong or not as strong as expected and did not last for very long. And the main reason is specifically because the Chinese consumer do not have confidence in the economy. And they don't have confidence because right now the Chinese economy is suffering from the structural issue linked to its property sector, which is around 30% of GDP. And as well, there is quite a high level of unemployment considering the Chinese economy's normal level of unemployment, and especially among the youth. And this means that the Chinese consumer does not have confidence either in the income that he is going to generate, or in the expectations of employment. And this is why Chinese consumers are actually saving, which is kind of the opposite of what American consumers did during the period of high inflation. And they're saving, so which means that they're not consuming and they're not investing. And that is one of the main issues that China is facing right now. Now, the Chinese authorities have implemented measures, both fiscal measures to support the economy as well as monetary measures. So the People's Bank of China actually cut rates in order to support the economy. But obviously, these measures take a bit of time to fully materialize and have an effect on the economy. And that's why we expect that the growth rate in China in 2024 will be quite low. So 4.3% is quite low considering China's normal growth or even its pre-pandemic growth levels, and perhaps a stronger rebound in 2025 when the effects of these policies materialize. So why am I doing this focus on China is because China, what happens in China is important for all of its trading partners. And obviously South Africa is one of China's, China is South Africa is one of its main trading partners, and trade relations between the two countries actually matter if you look at what's happening in South Africa at the macro level. And I'll come back on that a bit later when I talk about the external picture. So this is the global overview. This is the world that we are in. And South Africa, so since we said that we would map what would happen in 2024, let's start with the most important point, which is the elections. So for over a year now, polling has consistently showed that the ANC would not get an absolute majority, with the latest polls indicating that its support, at least in terms of voting intentions, is now below 40%. Now, you always have to put this a bit into perspective because polling is not always very accurate. And come the moment of the election, it is quite possible that the ANC's strong voter base, grassroots voter base, actually mobilizes more than expected. So it will also depend on turnout. However, I mean, most analysts around the world and in South Africa think that they will actually not reach the absolute majority. So then the question becomes, how much do they manage to secure? And depending on that percentage, that will also influence their ability to implement reforms and to govern efficiently. So here I've just put three very quick scenarios on what could happen in terms of the final results after the election. So as you can see, that in the first scenario where the ANC would be close to 50%, but not 50%, basically, and with the DA coming in second place, in a scenario like this, it would not be very complicated for the ANC to form a majority, in which case, basically, policy making would be relatively unchanged compared with what it is now. In the second scenario, which is the one which is actually the most likely, according to analysts, the ANC would have to form a minority government and perhaps have a small coalition with the DA. That would also not, I don't think it would hinder their capacity to govern efficiently, but it would mean that some compromises would have to be made on some fronts in terms of policymaking. If you look at the third scenario, which is unlikely but not impossible, in which the ANC gets closer to 40%, which would be a very bad result for the ANC, obviously, and then that the EFF comes in second place, then that could create a situation where basically the left-leaning part of the ANC is actually bolstered by the results of the EFF. It could also mean that Ramaphosa is not president, and in which case, I mean, policymaking would become a bit more difficult because it would mean much more compromises on some policies, and basically the reform agenda would be harder to push. So we don't know what's going to happen yet. It might be any of these three scenarios, with the middle one being the most likely. But why the real the real point of looking at these elections in this perspective is to know what reforms can be implemented, because that is what the South African economy needs at this moment, is proper governance, and through the medium term, so through at least 3 to 5 years. And the reason being that if you look at the macroeconomy, the South African economy, like, first of all, we have to say that it has been quite resilient, considering the constraints that there were on the economy. So here I'm talking about the two major crises, on the energy sector, so linked to Eskom mainly, and in the logistics sector, which is linked to Transnet mainly, which are problems of governance that are inherited from the Jacob Zuma era. The economy has been resilient because there is still growth, low growth, positive growth, and the economy actually did avoid a technical recession. So you can see that here on this chart, there are no two consecutive quarters of GDP contraction, which was not at all given at the beginning of 2023. Most analysts thought that it would be much worse. So the economy has held, and South Africa's resilience in the macroeconomy is something that it's known for historically. If you look at the last quarter, there was actually some easing in the energy constraints mainly. That is why the manufacturing industries and the mining industries have performed a bit better. But as you can see, there is also some concerns, especially regarding the agricultural industry and mainly the livestock and poultry, because there is animal disease and suffering from the logistical bottlenecks as well, because agriculture is also an exporting sector. So in terms of the outlook for 2024, for now it is quite stable. So a small rebound at around 1.2%, because we estimate that the reforms that have been implemented to address this twin crisis, the supply side crisis, will start to materialize in a couple of quarters, or later, perhaps in end 2024, beginning of 2025. So while the main constraints on the South African economy remains supply side constraints, there are also demand side constraints, and the main demand side constraint is the sticky inflation rate. So in South Africa, the inflation rate did not spike as high as in other emerging economies, but now it's also receding slower than in other economies, because there are still price pressures. The food price pressures are easing a bit, but the ones related to fuel and the ones related to services, and here it joins what's happening in the advanced economies, are actually still quite strong, and the rand is weak. And we'll see later why the rand will remain weak. So basically, the fact that the disinflation process is slower means that the target of the SARB, which is 4.5%, will be reached much later. So now they're estimating at end 2025, which means that the monetary policy will remain restrictive for longer. In fact, while in the hiking process, the SARB basically followed the Fed's footsteps. I don't think that they'll ease as fast as the Fed, and they've clearly announced that they would maintain, rates into a restrictive level for longer, which means that the first rate cut for South Africa could be as late as third or fourth quarter of 2024, depending on what the data on inflation shows. So there will still be this demand side constraints with inflation and with higher interest rates. Another reason why there are demand side constraints is because obviously consumer confidence in the economy is low, not only because the economy is performing not too well, but also because obviously you have price pressures and you have one of South Africa's main structural problem, which is the very high unemployment rate. Now, there are several reasons behind this. One is that in the current context, and even for the past years, if you just exclude the post-pandemic rebound in 2022, basically the ability of the economy to generate jobs is hampered. To that, we can also add that there are mobility issues around workers' mobility, especially in urban areas. So often housing communities are far from the business center and the industrial centers, which mean that commuting times are long. And there is also the fact that transport costs are high in South Africa relative to, for instance, other emerging economies, and transport networks are not necessarily optimized for workers to be able to go to their working places. And so if you look at another measure of unemployment, which is not the strict rate, but the expanded rate, and the expanded rate is, when you include people who are left the job market and who are not unemployed and not actively seeking for a job, obviously this expanded rate is high. And this expanded rate is high because there are actually lower incentives in South Africa for the unemployed to look for a job, specifically because if you consider the level of income and the level of costs, for instance, of transport costs, and if you combine that with relatively high income tax, especially for low-income households, and also social benefits that do not necessarily incentivize to look for a job, all this combined means that South African workers are and perhaps not encouraged to work because the benefit of it compared to the revenue that they get is actually not worth it. So obviously, resolving this problem is not a short-term problem. It needs long-term policymaking, which is why the results of the election and the capacity to implement policymaking in the medium to long term is so important. And to incentivize workers to go and look for jobs, they would need to change a bit, perhaps, the tax brackets or create social benefits that are geared towards decreasing transport costs and also infrastructure investment that is, in order to construct homes closer to industrial and business centers so that workers have more incentives to go and work and also lose less of the revenue that they earn to their job into costs such as transport. So that would be kind of a policy set that would work in terms of an unemployment, but still it remains one of the big constraints on the demand side of the economy. Now, if we look a bit at the accounts, so here when I say accounts at the macro level, it's the public and external accounts. So if you look at the external accounts first, obviously the external situation of South Africa is now deteriorating relative to what it was in the post-pandemic period, and also it's returning basically to what it was in the pre-pandemic period. And that is mainly because here we are going back into commodity prices into China as well. That's because the price of the commodity of the basket of commodities that South Africa exports is actually now much lower, which means that the strong trade surpluses that they had in 2021 to 2022 are now eroding, and that the deficits that are structural in terms of services and of income are now pressuring the current account. And this means that since we are back into quite a substantial current account deficit. I mean, not the highest you can see in the emerging world, but still compared with the surpluses that were there in the past 2 years, it is still significant. This means that the need of financing for the South African economy will now increase. On the bright side, we can see that thanks to some of the reforms that were implemented, especially in the energy sector, the level of FDI that is inflowing into the South African economy is actually now higher than what it used to be historically. And because those FDI are specifically geared towards the energy sector and the mining sector. So although the financing needs are increasing, there are also some more stable financing sources that we are seeing. And so that in itself is quite a positive sign. But the economy also remains very dependent on portfolio flows, and that is quite volatile and quite linked to the perception that the markets have of the economy. So once again, the results of the election could also influence some of these financing sources. So that is something to keep in mind. The other very important point here regarding the external deficit is obviously the rand. So you can see here that the clear trend of the rand is towards depreciation, so it's losing its value, and which is normal because of what's happening on the trade side. The terms of trade are deteriorating, and the rand. So the general trend of the rand is depreciation, and the rand is a very volatile currency because it's speculative in nature. So it's very sensitive to the perception that the market has of the South African economy. And as you can see, some of this volatility can be linked to the perception of the economy. Some of this volatility can be linked to the perception of geopolitical matters. Some of the volatility can be linked to issues such as grey listing on the FATF, a sovereign downgrade by the rating agencies. And so basically in election years, this means that the rand will have spikes in volatility on either side, I mean, on the upside or on the downside, because the market will interpret what's happening in the economy, and the currency will move in according to the events that happen. But generally speaking, it will remain weak because the tendency on the external accounts is towards the deterioration of terms trade, and that is still the main determinant of how a currency will move into the medium to long term. So the rand will remain weak, which means that the pressure on the economy, especially in terms of inflation, will still remain strong because imported goods just cost more. And which is also why I think that the SARB will not ease rates as fast as the Fed, because they would want to maintain perhaps an interest rate differential that slightly favors the rand for slightly longer, since the currency is weak from its other determinants. And to finish my presentation, let's talk a bit about the public accounts, the fiscal part, basically, of South Africa. So the fiscal performance last year was not very good at all. And the main problem that the South African budget or the government has right now is that the sources of revenue, and the main sources being the revenue that is generated from the economy through taxes and the revenue that is generated from taxes on exports, both of those revenues are now constrained because the economy is not performing very well. So the level of income of households and corporates is not as strong as it should be, and the prices of commodities that South Africa, we just saw it, exports is also lower. So the taxes you get from them are also lower. On the other hand, the expenditures are still quite strong. One, because we're in an election period, so obviously there's a bit more expenditure linked to elections, but also because you have issues such as emergency financing into Transnet, emergency financing into Eskom, that have to be done in order to solve the structural problems that the economy is facing, and we also have a wage bill that is still quite heavy. So this mismatch means that basically this mismatch, and if you add debt interest to that, that is what means sustaining this fiscal deficit that is quite important, which is between 4 to 5% of GDP, and this will be throughout to 2026. In terms of debt, obviously this means that the need for financing of the government is still strong, which means that the debt level and relative to GDP will remain quite high, so above 70%, and same thing through to 2026. Now, the advantage that South Africa does have compared with some other emerging economies and countries in Africa is that the structure of its debt, which is 80% domestic, protects it against currency shocks, and which is a good thing considering that the rand is weak. However, and also the fact that the South African banking and financial sector is large and is liquid, so which means that the capacity of the government to finance itself is still quite strong, which is why, despite quite a high level of debt, South Africa is not considered a country that can default, really. I mean, it would be very unlikely. But the fact that the fiscal trajectory is not very good means two things. One is that the fiscal policy will remain quite restrictive, so there will not be much push for for the economy from the fiscal side, just because the fiscal space is constrained, whereas the economy does need infrastructure investment for all of the reasons that I mentioned before. And the second thing is that despite the fact that the default risks are not very high, there is still a risk that sovereign rating still downgrade South Africa's rating. They did not do it until now, and I think that that was also a political choice. But as I said, like due to the nature of South Africa's currency, sovereign ratings can have big impacts on how the rand moves, and also generally the perception that the markets have of the South African economy. So that is why it is not a good thing that that the debt to GDP level remains high. But at the same time, considering the state of the economy, there is not really any means to substantially lower it to around perhaps 65 or 60% right now, until the South African economy starts to generate growth again and hence generate revenue, and then sort of stabilize to that level. So that is also very important. That is also one reason why it's very important that governance goes through in the years to come, because these are issues that can only be solved by solid policy making that is sustained throughout time. I'll stop here and I'll leave the floor to Stephen.
Thank you so much, Aroni, for that presentation. Very technical, very interesting. I thank you for that. Before giving the floor to Stephen, sorry, I didn't got a chance to introduce you. I think everyone understood that you are the economist for Africa at Coface, and you've been dealing with subject linked to the country risk and macroeconomics analysis of African economies. So thank you so much. And before the transition to Stephen, I just want to say a brief word on Coface because I haven't got a chance, sorry. So Coface is also one of our platinum members with 75 years of experience. They stand as the beacon of reliability and expertise in trade, credit, insurance, and specialized offering. So I will send you more feedback. Aroni, can you confirm you will be able to share the slides with the participants?
Yes,
I think
yes, of course.
Yes. Okay, but thank you so much. So we had a very good introduction of the economy in South Africa with different factors playing on it. I think one positive note that we'll keep is the fact that South Africa managed to, the economy has held, which is a very positive note. And I'll give the transition to Stephen, who's going to tell us a bit more on his vision and his expertise. Stephen is head of ENS forensic practices. He's a renowned specialist, white-collar crime prosecutor, and a forensic lawyer. It's a very hard word to say for me in English. He obviously specialized in leading financial crime investigation for both civil and crime matter. Stephen also performed investigation in the financial, oil, gas, mining, insurance, and retail sector in multiple jurisdictions in Africa. As a very important point as well, his expertise includes anti-fraud and corruption matter, assisting clients to meet anti-corruption compliance requirements. And he's been appointed and recognized as the financial crime investigator for 2022 by the International Association of Financial Crime Investigation. So 2 experts on the topic. Stephen, the floor is yours. Thank you so much.
Thanks so much, Margot, and welcome everyone. I'm speaking to you from Australia. I found myself drawn into an urgent assignment and flew over the weekend, so I didn't anticipate I'd be speaking from abroad, but welcome everyone. I'm going to give a few insights on the rest of 2024 and its implications for sanctions, fraud, and corruption. And there is some positive news because 2024 is the make or break year. And I shouldn't say make or break, it's a watershed year for South Africa because we are undergoing a concerted effort as a country to get off the Financial Action Task Force grey list. And I'm going to just walk you through some of the deficiencies. And then the positive news is the stream of legislative enactments that have already been implemented to try and get us off the grey list. There's a lot that has been done. And I think it is quite encouraging. And some of these changes are as recent as a couple of days ago. On the 3rd of April, President Ramaphosa signed into law the new Failure to Prevent Corrupt Activities Act. It's an amendment to PRECO. There's a new Section 34A, and I'll explain what that is all about, because that's going to force a lot of companies that don't already have robust anti-corruption compliance programs. It's going to force those companies to put the programs in place and to reduce the ability of individuals within the corporate sector to pay bribes to government officials in order to win tenders, etc. The other important thing about an election here is many of you will know that I gave evidence at the Zondo Commission in the cleanup of one of the big IT companies. And what was happening in that corruption is that a lot of tenders were being awarded in exchange for political donations. So it is very important for companies out there to have a policy on donations, political donations, campaign funding, and to make sure that you stick to the rules when it comes to the funding process. And there is transparency that is required. So you've also got to declare what donations you make to political parties. So I thought I'd just highlight and stress the importance of that, making sure that you comply. And then the other important thing that we're seeing at the moment is, and I think that's going to continue for the rest of 2024 and hopefully not for too much longer beyond that, but that is the Russia-Ukraine conflict. So at the moment, our teams have been exceptionally busy helping clients that have interests in Russia to navigate those relationships, because there's high sanctions risk at the moment. South Africa doesn't have dedicated sanctions against Russia or Israel for that matter. And the other part of the sanctions requirements or compliance requirements is the Israel-Lebanon conflict that has also introduced a whole spate of sanctions. And it's so important that you constantly monitor the sanctions environment, because you've got OFAC, the office in the US, that is imposing sanctions on a regular basis. There was a whole waft of new sanctions that were imposed recently after the recent developments in Russia. And then coupled to that, we've also got a lot of companies trying to do more business with Iran, and Iran remains sanctioned. So it is important to make sure that your compliance screening is robust, because in addition to OFAC sanctions, we also have to deal with EU, UK sanctions, and even countries like Australia have implemented a sanctions regime. So making sure you stay on top of that is important. But just to quickly walk through some of the issues that we had as a country, we had a very negative report by the Financial Action Task Force in 2021. It revealed acute deficiencies in our anti-money laundering regime, and we had 2 years to implement the necessary changes. And by February of 2023, FATF decided that we hadn't done enough to address the shortcomings. We were only compliant with 3 recommendations, largely compliant with 17, partially compliant with 15, and non-compliant with 5 recommendations. FATF is a financial action task force. It's a voluntary body that provides recommendations and governance rules in order to make sure that countries stay on top of anti-money laundering risks. And we were put on the grey list, and you can see the countries that we share that grey list with. And last year, Namibia and Kenya were also added to the grey list, and a couple of countries went off the grey list. The UAE, Barbados, Uganda, and Gibraltar came off. And we're not in great company on that grey list. And when I compare South Africa and our systems, we have a robust financial system in South Africa, and we don't deserve to be on the same list as Cameroon, Burkina Faso, Haiti, Mozambique, and even places like Senegal, Philippines. We've got to get off this grey list, because it is also negatively impacting our economy. And we've become an unattractive investment destination. And in order to address that, I think the changes are going to be crucial. What has happened is the Zondo Commission has laid bare some of the shortcomings in terms of corruption. But the key points where we fell short was poor understanding of the scale of money laundering risks. Government agencies had been undermined for the years of state capture. Organizations like the National Prosecuting Authority, the Hawks, were deliberately decapacitated to facilitate state capture. And law enforcement agencies lack skills and resources to proactively investigate money laundering. There were too few prosecutions, little recovery of state capture proceeds. And one of the key findings by the FATF was that we have too few prosecutions for terrorism and terrorist financing. And their research indicated that Africa, and South Africa in particular, is a hub for terrorist cells, but we were not doing enough to identify the flow of funding to terrorist organizations. And so we only had one recorded terrorism financing conviction in the last 30 years. And then lack of beneficial ownership information. And we've got a number of high-risk sectors. The crypto assets were not regulated. That has been addressed. And then high-risk other sectors, we call them non-financial professional organizations. The dealers in precious metals, estate agents, dealers in stones, diamonds, and the crypto assets were not sufficiently regulated. The risk-based anti-money laundering regulation was limited to banks, and it happened too infrequently in other sectors. That's also changed. And one of the dramatic changes recently is that the Financial Intelligence Center has taken over inspections over the legal practitioners, and they've taken over that responsibility from the LPC. And then the last two criticisms were we had slow mutual legal assistance and major improvements to the counter-proliferation financing was required. We've done a lot to get off the grey list. And I think I'm going to just zoom in on what we've already addressed. We've addressed 52 of 67 recommendations that were recommended. It was actions recommended by the FATF to help us get off the grey list. And we will only address the remaining 15 actions by January 2025. And I'm hoping that we've done enough in 2024. The FATF have indicated in a recent report that they recognize the good work that has been done by the South African government. And a lot of that good work has come in the form of increased regulation for all of us to comply with. And I'll walk through just some of those changes very briefly. The problem we've got is we've also got to demonstrate enforcement of these new laws. And that's where we really are struggling. So I've been in discussions with the NPA, and there are a number of cases that they are about to get on the court roll. We recently, just a couple of weeks ago, we saw the suicide of Marcus Jooste, who was implicated in this whole Steinhoff saga, which is the biggest fraud South Africa has experienced to date. And he was about to go to court. The matter was being placed on the court roll. And I think Marcus, just before he committed suicide, 2 days before he committed suicide, he was also handed a 578 million Rand fine by the Financial Services Conduct Authority, the FSCA. And a day later, he was asked to hand himself over to appear in the courts in Gauteng. And I think he decided that the life as he knew it was about to end, and he ended his own life. But what is positive about the Steinhoff saga is that this was one of the first cases where the state had brought in private sector counsel to prosecute, and we had senior counsel. Wim Trengrove, one of the top lawyers in the country, was going to lead the team, and they were experienced prosecutors coupled to that team. And I think that they were going to get a good result on the Steinhoff matter. And I think those are some of the factors that induced Marcus Jooste to take his own life. We've been slow. We are going to still battle to get prosecutions underway because white-collar crime, corruption matters take a long time to investigate. And when they get placed on the court roll, it's very easy for offenders to drag the matter out. And we've seen our former President Zuma has become a maestro at what we call the Stalingrad delay in tactics. And I think that's something that the NPA will have to deal with and address. But there are a lot of cases that are regarded as low-hanging fruit from the Zondo Commission that they will be tackling over the next couple of months. And I hope I'm not being over-optimistic, but I'm hoping that before the end of the year, we're going to see a lot of these big fish being placed on the court roll. The other changes that have been introduced is there is new legislation underway to protect whistleblowers, and Judge Zondo has also recommended that the state look at deferred prosecution agreements, DPAs, to induce corporates out there to cooperate with the state and to self-report and get leniency when they do self-report when they find corruption within their own organization. But there are radical changes to the whistleblower protection legislation proposed in order to better protect people who blow the whistle on fraud and corruption. And then this introduction of the failure to prevent offense. The other thing that I do know is happening quite extensively is we are collaborating as a country with some of the superpowers, the US, the UK, and there's a lot of mutual legal assistance requests that are going out from South Africa, and a lot of information is being provided to South Africa on offences which have global reach. Where we've got to really demonstrate success is on law enforcement, prosecutions, and convictions. And one of the big criticisms of South Africa, which is currently being addressed thanks to the generosity of the banks that belong to SABRIC, as well as Remgro and Anglo, they've committed a lot of funds to help the state to develop a digital forensic center of excellence. And that was opened just a few months ago. And at the moment, it's been hosted by SABRIC. They've provided extra desks for expert analysts to help the police with a backlog on cash flow analysis, financial investigations, digital investigations, where the police simply lacked capacity. That was one of the criticisms of the FATF, and that has been addressed. If we look at this new Failure to Prevent Corrupt Activities Act, this new offense that's been introduced, what it does is it forces companies to put in place an anti-corruption program, and it requires tone at the top. It requires a risk assessment. It requires due diligence on business partners. It requires companies to implement an anti-corruption training program. All of these different components are going to force companies to have adequate procedures to show that if corruption takes place, they have done whatever is reasonably possible to prevent the corruption. And I think that's another really positive innovation that is going to help. It has been a really successful piece of legislation implemented by the United Kingdom government, and we've copied the activities with the introduction of this legislation. If we look at the follow-up report by the FATF, they've highlighted that we actually have done a lot. We've been all of these non-compliant recommendations, we are now partially compliant or largely compliant or fully compliant. And I think the big challenge is addressing effectiveness and demonstrating that we get some prosecutions underway. I will share my slides so that you can see the last report that was issued by the FATF. And this comes directly out of the response from South Africa's National Treasury. And I think it is really positive, and it shows a good plan, and a lot of work has been done to get ourselves off the grey list. And I'm going to take you on a whirlwind ride just through the legislative amendments we've got. We had to address trust property, and we've amended the Trust Property Control Act. We passed the GLA, the General Laws Amendment Act, to bolster our anti-money laundering legislation. NPOs, non-profit organizations, are often used for terrorist funding or for fraudulent purposes, and we've tightened up disclosure requirements for NPOs. The FIC Act has also been bolstered, and we've amended the Companies Act to allow for beneficial ownership information disclosure, and then Financial Sector Regulation Act. So some radical changes. You've all seen already the requirement to disclose beneficial ownership. We've also, with the amendments to the Financial Intelligence Center Act, they've brought in reference to businesses dealing in high value goods, and that limit is low. It's 100,000. And that means that a lot of organizations which previously were not regarded as accountable institutions now have to have robust anti-money laundering programs, and the FICA compliance is so much higher. And companies now have to designate a compliance officer. They've got to provide training, and they have to comply with reporting obligations. And the penalties for non-compliance, as you see, they are massive. The FIC has said they're going to give leniency for 18 months. And we caution companies out there to get their houses in order as soon as possible. We've introduced the Financial Advisory and Intermediary Services Act, which now regulates the virtual assets. So crypto assets have fallen under the jurisdiction. Sorry, someone's trying to invite me to another meeting. I've just ignored that. And there's lots of reforms to the whistleblowing legislation that I spoke about. So it is quite amazing to look at what has been done. I'm quite positive that we are going to get off the grey list. And when you look at how much we actually have done in quite a short period of time, I think it's nothing short of remarkable. And I really am holding thumbs that the NPA get it right to get some prosecutions underway. We'll open up very briefly to questions. And as I said, I'm sorry I've rushed so much, but we will share my slides with you, and we'll open up to the floor to questions to the two of us. So thank you, Margot, and I hope you're happy that I did manage to compact. Thank you.
Yes, thank you so much, Stephen. I'm actually also very impressed by all the efforts in terms of, the radical changes that have been done recently. That legal aspect, as much as the economic introduction that we receive, are quite relevant in order to better understand the challenges that South Africa is facing. So thank you so much for both introduction. We have a few minutes. Sorry, we're going to definitely be over an hour. We apologize for that, but if there is any question, please use that opportunity to ask our two experts related to the questions. So I think we've got one hand raised. Yes, and I know that person. So please, Kosi, the floor is yours if you have any question.
Hi guys, hi everyone. And I know the two gentlemen quite well as well. One from TV, one from our economy as well. So there is two layers of things that we are seeing in the country, where the Ramaphosa era is being compared largely to the Zuma era. One is superficial, one is structural. So my question is to the two gentlemen from their understanding, because like what Stephen said, now in the Ramaphosa era, there's been a lot of structural fixes that have been done in the background, which were broken down in the previous years. But superficially, it seemed like South Africans feel they were better off than the other one because of the price of petrol, price of everything going up. So my question then is, economically wise, from a way going forward, which one would you say would be a better way from an economy perspective to say, okay, the country's better off under this one, even though you don't see it, but it is actually better off going in the right direction? I don't know if that makes any sense at all.
Yeah. Maybe I'll jump in before Aroni gives us the economist input. But what I shudder to think about is what life under COVID pandemic in the Zuma years would have been like. Our president was proactive. He did a lot to really address the issues. And I think that in my mind, it took 10 years to destroy many of the institutions, the NPA, the DPCI, and we mustn't expect everything to be rebuilt overnight. And for me, you can't compare the Zuma years with the Ramaphosa years. I know there is massive frustration that our president is not doing enough and things are not happening quickly enough. My message to the people out there is to be patient, give him time, and I'm hoping he gets another term to really show that he can actually make a difference. And then my last message is that the president is, I think there's no one else there to take his place, and I shudder to think of some of the alternatives. Over to you, Aroni.
Thank you, Stephen.
So on the economic point of view, I also do think that in terms of what was done, especially in the post-pandemic era, and what is being done now in terms of the economic reforms, are definitely a step in the right way. I do think that perhaps these issues were, they really came at a critical mass before the reforms were implemented. So basically, there was no other way at the point ESCOM was, in 2022. There is no other way than to reform Transnet because of the state of the logistics and infrastructure sector. But nevertheless, although it did come to that critical point, the reforms that are being implemented are going in the right direction. And generally, that's what analysts think, that's what the markets think. But obviously, they take a lot of time to fully materialize. So you can have some short-term effects in some components of the economy, but some other can only be measured in the medium to long term. And obviously, there is this big difference between what is happening and what is perceived. And one also has to be cognizant that most of the public opinion will not perhaps fully understand the structural mechanisms that are in place. And so that is also where communicating efficiently around these reforms is I would say, one of the larger goals. It's not only what you do, it's to be able to say that we are doing this, be patient. So I think that the communication part is just as important, but it is also normal that, South Africans would perceive negative feedbacks from even the Ramaphosa era, simply because this period was extremely frustrating for most of the populations around the world, just because of the nature of successive crises and just kind of the general fatigue that you accumulate if your economy and your livelihood is being affected so many times in such a rapid succession. Well, obviously, some of these events that are happening are not completely linked to South Africa itself, and these shocks are external, right? But at the moment, the population does have to, kind of find a culprit within brackets for what's happening to them, and often that would be directed towards, the governance or the political figures. And that's not only in South Africa, it's everywhere around the world. You can see the contestation that's happening in Europe around just the political systems, the fact that some extreme parties are now very strong because people are tired, and they need to find someone to put the responsibility on. So, and that is something that is inevitable. I'd say that it's quite normal what you said. It's not surprising, but that's also why, once again, experts and even the political force themselves have to communicate on what is being done. Without the communication, the perception would change. So I'd say that is perhaps one of the other kind of big issues that Ramaphosa will have to tackle if he's re-elected, is to be more clear on what's happening. The transparency is very important. And obviously, we know that both in politics and in economics, there's a lot of opacity. So perhaps that is also one of the issues to tackle. And that also goes for everything that is linked to the FATF, or in terms of the corruption reforms that are being anti-corruption reforms, to just be able to communicate to the rest of the world that we are doing this. And so it will take time, but you have to have confidence. So I think that's the main thing I would say.
Thank you, guys.
Thank you so much. I think it's correct. The patience is key, and we need a long-term, medium-term vision to be able to observe all those changes. And I agree with you. The communication is key in order for citizens to be aware of what's happening. And as I was saying for Stephen, I'm very surprised to see all the radical changes and implementation that has been in place that I was not necessarily aware of. So thank you so much for sharing those two economic and legal point of view. I think it's very relevant for us a month before election for everyone to have a better understanding. So thank you so much for both of you. Before closing, sorry, I see a last hand. Yes, Dr. Yves Guénaud. we already 6 minutes over time, so let's try to wrap up, and thank you so much. I'll let you share your comments.
Thank you so much. I want to congratulate the two, Stephen and Aroni. It was really very, very interesting, and I think our colleagues from the Chamber and other people there today have been very happy to receive your message. As you know, I am the chairman of the Chamber, and I follow what's happening. Thank you so much. I have a question globally, a very short one, is what is the best for the country? ANC will have in any case 42, 45, and so on, okay? What is the best for Ramaphosa to push the reform? Is to continue with small party close to him, that means not changing, or to be with people like Action SA or others, and just to oblige him to do the reform, because I think, as you told, he wants to do it, but he's blocked also by his own party. So that means what will be the best, or I go drastically to the opposite to say, okay, in any case, on the ANC guy, even on my list, I will have problem. Better to go with a part of my list and the DA to try to change things. What is your vision? I know that it's not easy to answer the question.
I'll let Aroni jump in first.
Yeah, I mean, so I don't have the, I mean, I'm not in Ramaphosa's head, but what I would think is that he would, I mean, depending on how much he gets, I think that it would not be necessarily a bad thing for him to have some alliance with the DA. Instead of perhaps the more left-wing part of the ANC, which have been known to block also reform making and policy making. So perhaps that would be a viable solution for him, but he cannot, like Ramaphosa cannot survive without the support of the ANC either. So it has to be something which will be kind of very nuanced. He has to have the support of most of his party, but it would perhaps be beneficial for him as well to have a bit of support from the part of the DA that would be willing to go hand in hand with him for his reform agenda. And I do think that one part of the ANC and most of the DA do recognize the fact that what is important right now for the country is that reforms pass, and that reforms pass in a very convincing manner. So I think that he will be able to find, whatever be the final results, he would be able to find some kind of support for his government in order to push his agenda. So I don't think that there is a very high risk that everything goes wrong for the ANC. But once again, it's an election, so we never know. It will also depend on what happens from now until 29th of May. And it also depends on turnout. Turnout is very important. If there is low turnout, it's possible that the situation becomes a bit more difficult for the ANC. If there is high turnout, there's a likelihood that the voters that were not the historic ANC voters who are not happy and not willing to mobilize ultimately go and do vote for the ANC. So, I mean, there can be a lot of factors, but I'd say that, yeah, for him, it's perhaps not the worst to have some support from the DA as well, in a very minor, in a small coalition with the DA, basically.
Yeah, and if I may, just from my perspective, and remember, I'm a lawyer and a former prosecutor, I just hope that the president has got the ability to bring his party with him and to do what is in the best interests ultimately for the country. And I think some form of compromise and just relationship, I think, is going to be beneficial to getting reforms passed. Thank you.
Thank you. I think that was a good question, as always, Dr. Yves Guénaud. Thank you so much for all of you. So I see we've passed the deadline. I mean, the time, it's past 11. So I want to thank you all for your participation. Thank you, Aroni, and thank you, Stephen, for both your economical and legal point of view. I think both together was quite interesting and relevant. So thank you so much. I will be waiting for your feedback to share the the slides and share the replay. And we wish you all a lovely day further. Thank you so much, Stephen. You can go rest now because we know you're far and you deserve some good rest. So thank you so much to our 2 Platinum members, Coface and ENS Africa. We'll be in touch for the next edition. Thank you very much for your time. Really appreciate it.
Thanks, everyone.
Thank you. Have a nice day.
Thank you. Bye-bye.
Thank you so much.
Thank you very much.
Hey, bye.